Hello YouTube and welcome back to another episode of Invisible Head Investing. My name is Carlos and today we're going to talk about whether or not it's a good time to day trade or swing trade Alibaba stock, or if we should just avoid the stock completely. So before we get started, hey guys, if you want to get some free stock, click on the link below and create a new account with Webull. You get 2 free stocks worth between $2.50 up to $250 just for creating an account. Now, if you deposit $100, you get an additional 2 stocks worth between $8 and $1,600. That's a pretty good return on your investment. Thanks for supporting the channel. Now let's get back to it.
We want to talk about Alibaba this morning because those shares are sharply lower in pre-market trading. It looks like there is a new antitrust investigation occurring in China. Our Emily McCormick is here to tell us about what is going on there. There's really been increasing scrutiny that's been ratcheting up this year.
That's right, Julie. And we are now seeing a more concerted effort from Chinese regulators to rein in the sprawling e-commerce and fintech empires of Alibaba and Ant Group. Now, on this news from today, we have Beijing State Administration for Market Regulation saying that it's launched an antitrust investigation into Alibaba, and other regulators also called a meeting with Ant Group to push the company to implement new financial regulations. And the connection between these two companies, of course, is that Alibaba does own an about 33% stake in Ant Group.
Okay, so there are 2 really important factors at work here. Number 1 is the antitrust investigation against Alibaba Group, and number 2 is the IPO that Jack Ma wanted to launch with regards to the Ant Group. So first of all, we're going to talk a little bit about Ant Group. In 2004, Ma's Alibaba Group, which owned China's largest online retail platform, Alibaba, started to build out a super fast payments platform, which it said would enable its users to make payments easily. The third-party digital payment app, named Alipay, however, surpassed all expectations and gained millions of users in a very short time. The app has now close to more than 1 billion users, according to reports, with over 730 million of them active on a monthly basis. In order to capitalize on various offerings of Alipay, Ma spun off the app and brought it under a company called Ant Financial. This company was later rechristened as the Ant Group. So what we have here is Jack Ma wanted to spin off the Ant Group, which is the easy financial pay, kind of like a PayPal, wanted to spin it off into its own IPO. But he recently made comments that kind of pissed off the Chinese government, and I personally believe that this could be one of the reasons why the IPO was stopped, as well as why there's antitrust investigations going on against Jack Ma. So let's take a look at what Jack Ma said. Last month, authorities quashed Ant's planned blockbuster initial public offering less than 2 weeks after Ma castigated financial regulators for being obsessed with minimizing risk and accused China's banks of behaving like pawn shops by lending only to those who could put up collateral. On Thursday, the same morning that Alibaba's antitrust investigation was announced, 4 regulatory agencies said that officials would meet with Ant to discuss new supervision measures. So in my opinion, this is what's going on. Again, I'm not a financial advisor. This is strictly just my opinion. And based on what I see, China is a communist government. I don't think that China appreciated Jack Ma criticizing the major financial institutions in China. And they're looking at him kind of like a rogue capitalist. And capitalism isn't something that thrives in communist governments. Between the financial institutions getting pissed off at Jack Ma for making that comment, and the Chinese government probably having a close relationship with these financial institutions, we see that the IPO was stopped. Okay, the second thing that's really affecting Alibaba's stock is this antitrust investigation. Let's take a closer look at that.
Now, with the antitrust antitrust probe into Alibaba, regulators are focusing on reports that the company had pressured merchants into committing to selling goods on its platform alone and not turning to other competitors. And then with Ant Group, the focus of that probe is on Alipay, according to the Wall Street Journal. And regulators are reportedly concerned about whether Alipay has resorted to monopolistic and anti-competitive behavior in order to maintain its massive base. And to be sure, Alipay is absolutely massive, especially in mainland China. It has more than 1 billion global users, and it processed about $18 trillion in mainland China in the year to the end of June. Now, this is all coming, of course, just over a month after Beijing also halted Ant Group's IPO, and specifically that dual listing for Hong Kong and Shanghai, which had been set to be the world's largest IPO, valued at about $34.5 billion.
That's massive, and that's one thing that really affected Alibaba's stock price. I believe it went down about 7% when it was announced that the IPO was going to be stopped. Okay, before we take a look at the charts, I want to talk a little bit about something that I haven't really heard anybody else mention. And again, this is just my speculation, my opinion, but I really think that this could become an opportunity for Amazon. On April 18th, 2019, Amazon announced that it was shutting down its China marketplace business. The reason for this is because Amazon was facing stiff competition from Chinese e-commerce giants Alibaba and JD.com. So why is this important? Well, Amazon had to shut down because of the competition it faced with Alibaba, and Alibaba is the biggest e-commerce retailer in China. And if the Chinese government forces Alibaba to break up due to monopolistic reasons, Amazon might consider going back to China and trying to set itself up again. I mean, one of its biggest competitors was Alibaba, but if Alibaba is not what it used to be, this could really open up the door to Amazon. Do I think this will happen? No, and here's the reason why. I don't believe the Chinese government will allow or will want Alibaba to be broken up because of tech giants like Amazon coming into the Chinese market. The Chinese government would rather see Chinese companies flourish rather than letting American companies come in and start taking over their markets. I believe that this will play a big role in whether or not Alibaba gets broken up. But I think the other thing that's happening here is that the Chinese government wants to put its foot down and show Jack Ma who's boss. I mean, they didn't like the criticisms that he was putting out there regarding the Chinese financial institutions. So this is kind of a way to rein in Jack Ma a little bit and kind of maybe some kind of scare tactic to control him and control what he's doing, what he's saying, to make him more of a team player when it comes to what's best for China. Okay, so let's take a look at the chart real quick. If we look here on the 180 chart, or 180-day chart, we see that Alibaba had peaked at $319.32. And this was right around the end of October. And then shortly after that, we see the stock start to drop once the Ant Group IPO was stopped, which was right around the first week of November. The stock dropped pretty significantly down to around $260 or so. And then once news came out about the antitrust allegations, then the stock really plummeted. If we look at the one-day chart going back to the 24th, we see that the stock dropped from a high of $239 that day all the way down to $211 before bouncing back and hitting a high of right around, not a high, but bouncing back up to $223. So if we look back at the 180-day chart, we'll look at the RSI and we'll see that it's at just over 11. I mean, it went down to 11.5 roughly, which is extremely oversold. So this could be a reaction in the market. There's a lot of uncertainty going on right now with regards to Alibaba and its future regarding these antitrust or monopoly allegations and investigations. But I think this is an overreaction to, this news. Nothing has been finalized. It is an investigation. Yes, there is some uncertainty, but this is an extreme overreaction to the stock. And I think it could be a good buy-in opportunity. Now, do I think that the stock will go right back up to the $319 range? Probably not, but I think that there could be some room here for the stock to bounce back So the stock closed at around $222 on the 24th, and I believe that there's a good opportunity here for the stock to at least rally, maybe $10, $20, $30 over the next upcoming week. And this could be a really good day or swing trade opportunity over the next few days right before the new year. Will we see the stock plummet even further? That's a possibility. I mean, if more negative news comes out, then yes, the stock could plummet potentially further down. But I think there's going to be a bounce back opportunity right now where we stand. And then in the future, we'll see what happens. So I already have a small position in Alibaba, but I could be looking to accumulate more shares depending on what price the stock opens up on Monday. And if I see that the stock is opening somewhere around the close price, give or take $5 or $10, I potentially will still buy some more shares because I think there's good upside potential of maybe 250, 260, even 270 over the next week or so at least. So time will tell, but again, this is just my opinion. I'm not a financial advisor. Do your own due diligence and take your own risk. This is just something that I'm contemplating of doing myself in the near future. Okay, guys, so that's it for today. If you stayed towards the end, you guys are awesome. Please don't forget to like and subscribe. And if you want to see more videos like this, again, leave a comment down below.